Okay. Well, we're gonna get going.
Wait,
All right, guys, thanks for being on today. We've got Blake Early with Cream City Mortgage with us. Blake is co-owner, I believe, one of the owners of Cream City. Um, and how long have you been doing this, Blake? I don't even know how long you've been in.
Dream City, this is our third year, but I've been a loan officer for 5 years now. So
Okay.
not terribly long, but it feels like I've been in the business forever.
I know it does seem like you've been forever with us forever. So,
Yeah.
um, Blake is just going to go over the general process. I really wanted to aim this at newer agents who just needed to get a handle on like the lending process, what lenders need, good talking points for your new buyers, things that you can go over and um, bring to your buyer consultations. Joan and I are always pushing for buyer consultations and really connecting our buyers with lenders right away. That's, in my opinion, along with securing an agent, the next step, even maybe before securing an agent, is securing a loan officer. So, with that, I will let Blake take it away.
Cool. Thanks, Steph.
Yeah.
And actually tomorrow, just a heads up, I'm doing a lunch and learn at the North Shore. So I don't know if
Oh,
you
you
have signed
are.
up for that. But we're actually going to do like a role play. It's going to be Dana acting as the buyer and then me as the loan officer. And I'm just going to interview her exactly how I would a buyer. So the agents kind of get an idea of like what that process feels like.
I love that. Perfect. Okay, you guys should definitely hit up the North Shore office tomorrow.
Yeah, it'll be a bit more in depth than what we'll cover today, but I think like how many agents have bought a home in the last 3 to 5 years? Probably not a ton.
Exactly.
So I think that'll be a good learning experience.
Yeah, that's awesome. Okay. Well,
Cool.
all right.
Sweet. So yeah, Cream City Mortgage. First and foremost, we are a brokerage. And so what that means is we have many different lenders and many different investors that we can use to shop rates, products, and costs around. So what you see on the screen here, I think there's 7 products, but really we have like 15 to 20, and some of them are a bit more nuanced. So I'd say like if you have investors that need products or like self-employed borrowers having a problem getting pre-approved, just reach out to us because likely we have a product for them. But these, what you see here, are the most basic, I would say, which probably most lenders do offer. So the first one's conventional. That's like your Fannie Mae, Freddie Mac, um, conventional guidelines. So pretty much anyone with a credit score of 620 and above, as little as 3% down for the down payment, that they're going to fit into like that conventional mold. That's the most common. I think like 90% of our loans are conventional. I would say probably like 90% of the industry loans are also conventional. And those are the easier ones for your clients to get accepted when they're writing on houses. And we can get it a little bit more into the nuances of why here in a couple seconds. So yeah, those are great products. First time home buyers, 3% down. We have some down payment assistance programs that falls into the conventional category. Fixed rate mortgages, those are the most common. 100% of our loans are fixed rate, and generally those are the 30-year terms. So your interest rate's actually locked in for 30 years. Um, the only time it's going to change is if you sell your house and you purchase a new one with a different mortgage, or you refinance into a lower interest rate. Um, 30 years the most common because your monthly payment's going to be lower than if you did like a 15-year or a 20-year. And that's because your payments are spread out over 30 years versus 15. So it's just a longer amortization schedule, lower payments. A lot of the times you'll have buyers ask about like 15-year rates, just because the 15 years a lower interest rate. We do those, but the monthly payments almost double just because that payment period's cut in half. Uh, Adjustable rate mortgages, we don't do any of these really. I mean, we have the option to, but basically, so it's fixed for a certain period of time, like 3, 5, or 7 years, and then after that they adjust to whatever the market is. The spread between an arm, they're called arms, an arm and a fixed rate, they're not that great anymore. And basically, our investors and our lenders don't have any risk tolerance for arms anymore, just because they locked in a bunch of people at like 2%, and now they're all getting readjusted to 7%.
Mm.
There's just too much payment shock for our clients. So generally, when a client asks me about an arm, I ask them the question, like, what is your appetite for risk? And if they say they have a high appetite for risk, they say, great, you might want to look at an arm, probably not through us because they're not that great. If you don't like risk, then let's just stay away from arms. That spread between the rate, it just doesn't make sense.
Do a lot of investors typically use arms because they're not holding on to the property? Like flippers, like are they kind of typically like the buyer profile who would,
Yeah, they would. Generally, honestly, we don't do a ton of flippers. Because what happens for us, if somebody pays off a mortgage within 6 months, we get penalized. We have to pay back all of our compensation to the lender.
yeah,
So we kind of stay away from flippers. We don't want that risk. Most flippers use hard money, but
got it.
if they're going to hold it for like a year, maybe 2 years, then yeah, an arm would make sense for a flipper. You're right.
Okay.
Good question. Jumbo mortgages. We have some really good jumbo programs. A jumbo mortgage is a loan that's over $806,000. So, which is crazy to think about because when I bought in 2019, the jumbo was 484,000. So it's like doubled, which is just insane to think about. I feel like every loan now is over 484,000, it feels like. But yeah, those the guidelines are a bit stricter just because, the lender's lending out so much money, but any loan that's above $806,000 is a jumbo mortgage. We do them, we're very good at them. The rates are about the same as a conventional 30-year fix, so there's not really too much difference between like a jumbo rate and a conventional rate.
Okay.
Uh, the guidelines are a bit more strict. Oftentimes you need at least 20% down. Um, you need like reserves for assets and stuff. So if you have a client that's looking for a jumbo loan, it's definitely best to have them pre-approved well ahead of time. FHA, whoopsie. FHA is a great program. I probably have like 5 in the pipeline that we're working on now. It's the government-backed mortgage loan. It's really excellent for people that have just okay credit scores. So I would say anywhere between like 640 to 580 we can do. The best part about FHA loans are the rates are just like insanely low. They're like a 0.5% better than conventional. The downside with FHA is that the appraisals are just a bit more strict than conventional. So that's the downside to it. If there's chipping paint, broken windows, any sort of like safety hazard, the appraiser is going to call out and it has to be fixed before closing. Um, but other than that, I mean, FHA is a great program. I love when my clients do them because the rates are great and it gives in 3.5% is the minimum down payment for FHA.
Okay.
VA, also excellent government loan, awesome interest rates. Any government loan that we do is going to have really great interest rates. So VA is for military veterans. Kind of same as FHA. Rates are great. You can do as little as 0% down. No PMI, no matter what down payment you do, it's 0% down. The appraisal is similar to FHA just because it's a govy loan, a government loan. So it's going to be a bit more strict. Like you need handrails on steps, no chipping paint, et cetera, et cetera. Any questions so far?
I'm just going to comment. I just want, our newer agents, just really your takeaway here is just like knowing and just having kind of like a small grasp on the fact that there are, different loan types out there so that, again, when you're communicating with your buyers and they just have general questions, you're going to connect with your loan officer and they'll go over, big picture, snapshot of your financial picture and then kind of like loop you into where they think you should go in terms of the loan product type. So,
Yeah.
um, yeah.
Yeah,
So,
by no means do you guys have to memorize any of
yes.
these nuance or details. We offer them. If your clients have questions on them, say call Blake.
Yes, exactly.
WIDA, great option. It's a government, not a government, it's a down payment assistance program. So your client can bring $0 to the closing table. Um, Great rates. Takes a little bit longer to close, but yeah, we do WIDA also.
And that's Wisconsin specific.
Yeah, that's Wisconsin specific. All right, so the process, I think there's like what, 10 steps here, but they're all pretty straightforward here. Number one, meet with a realtor, if you haven't done so already. So they're going to reach out to you guys. Most oftentimes people aren't reaching out for a loan first. They're reaching out to an agent because they're excited to purchase. So once they've met with you guys, it's, I would say, in your best interest to have them get pre-approved ASAP, just so they're not wasting your time and you know that they're qualified to purchase the houses that they're looking at. So get pre-approved. Um, the pre-approval process is really easy. It's a 10-minute conversation with me or one of my loan officers, and then it's about 10 minutes to complete an application link that we send them. And then we just ask for like 24 hours to get them pre-approved, but it's usually a lot quicker than that. So um, pre-approval can be a really easy process. And then once they have that pre-approval, it's, I tell my clients, happy house hunting. I don't make the pre-approval address specific, so the address is always TBD. But once they have that paper in hand, it's go find the house, make an offer, work with their agent to get it under contract.
Awesome.
And then once you submit the offer and it's accepted, your client will deposit their earnest money. They'll give it to you guys or the title company. We don't really have anything to do with that part of it. We just need proof that it's been deposited, and taken out of the client's account. But that's usually the next step after getting the accepted offer.
Circling back to the pre-approval process, another thing to keep in mind too is just to help you stress the importance of getting the pre-approval done. You're going to need to submit that pre-approval letter along with your offer um, to even compete. The seller is going to want to make sure that your buyer has done that initial pre-approval process in order for them to consider your offer. So just to help, help you guys have that conversation and to help stress the importance of talking to a lender right away too.
Yeah,
Um,
yeah, good point.
and then like with submitting the offer too, I know that Blake is good at um, talking to the listing agents too. If like you need to communicate to the listing agent, my loan officer is happy to answer questions about the buyer um, in terms of like, again, when they're wading through, and I'm usually talking about competitive offer situations here, but if like, you know, to give peace of mind to a seller, a lot of our loan officers, Blake's team is happy to talk to the listing agent too. So.
Yeah, yeah, that's a good point. Thanks for mentioning that. Just shoot me a text or an email saying, hey, we're submitting our offer for John Smith. Can you reach out to the listing agent? And then I usually text or call and just say, hey, John's super qualified. We have all of his documents. Dates and deadlines are no problem. If you have any questions, please feel free to reach out to me. And that brings the sellers a little bit of peace of mind. And then
Awesome.
circling back to Steph with the pre-approval, if your clients have any pushback about getting pre-approved, ask them why. We can do a soft credit check, so it's not going to ding them anything on their credit report. And you once in a while we'll find something on the credit report or there's something funky with income. Like a buyer always thinks they're qualified, but sometimes they're not. So it's just good to get ahead of that before you're starting to write offers on a Sunday night and they need a pre-approval and they don't qualify.
Yeah. Well, a lot of just like time savers for you guys.
Yeah, time savers and also like just peace of mind for everybody.
Yes. Yes. Okay.
All right, once they're under contract, we will flood their inboxes with disclosures just because there's tons of compliance in this business, as you guys know. So usually like a day or two after it's under contract, we send the client's initial disclosures. It's just going to lay out the estimated fees and costs. They used to be called good faith estimates just because it's our best guess of what everything's going to cost. And it's usually pretty darn close to what the actual costs are. So these are the initial disclosures. We really can't move forward until they've signed it because what they're signing is the intent to proceed. So we will order the appraisal once they've signed these disclosures. We'll send it to the underwriter as soon as they've signed these disclosures. But these get sent out really quickly after they're under contract. Once they've signed, we will order the appraisal on everyone's behalf. So the buyers don't have to do anything. The agent doesn't have to do anything. We send the client a link. They can pay for it on their credit card. Actually, that's the only way to pay for it is on their credit card. And then once they've paid for it, an appraiser will get assigned usually within a couple hours. And then we're usually getting appraisals back within like 7 to 10 calendar days. They're moving pretty quick nowadays.
Awesome.
And one thing to comment in the appraisal, if your client is doing 10% down or more, it's worth sending me the address beforehand to see if they qualify for an appraisal waiver. And how an appraisal waiver works is we run it through the Fannie Mae and Freddie Mac algorithm. And basically they check that address versus recent comps and recent appraisals in their database. That's happened in like the last year, basically. And if they think the value is good, then we don't need an appraisal at all. So it's really up to Fannie Mae and Freddie Mac if we need one. But send me the address and we'll check it with their database.
That's awesome. I assumed it was having to have at least 20% down
It
to
did
get.
used to be 20, they just changed it. Yeah,
Oh, fantastic.
yeah.
Okay.
10% down, single family house, primary residence. Those are the three basic criteria.
Okay. That's huge.
Yeah, underwriting. Once we send the file to our lender, it usually takes about a day to get initially approved by an underwriter. They're always going to ask for other documents, maybe letters of explanations, updated pay stubs, something like that. So as soon as your clients can get us the documents back for those underwriters, the sooner that we can clear to close the file, meaning everything's been finally approved by underwriting. I spend most of my day fighting underwriters. We don't ask clients for documents unless we absolutely need them. I can promise you that. We don't want to see your bank statements. I don't care about your pay stubs. We're only asking for it because we need it. So, yeah, don't get mad at me. We make it a smooth process.
And then just again, I always like to speak to like how we communicate this to our buyers and like at buyer consultations. Um, like our role in this part of it as an agent, is really just to make sure that we're like keeping on top of our dates and deadlines, but you'll communicate to your buyer, during this phase of the contract to close process, once we get an accepted offer, your job is going to be working with your lender and making sure that you are getting whatever they request in a timely manner. So I'm kind of out of this, and you really need to have good line of communications with your lenders and listen to what they say, basically.
Yes, send
Yeah.
us documents like same day if you can, but as quickly as possible. I know like loan commitment in 10 days is not a problem for us. I usually send it out as long as the income's been cleared. But with those tight deadlines, we just need buyers to be aware that, we need documents to close the fund, to close the file, I mean.
Yeah, the buyer has to be really aware of what his obligations are to the lender. The lender is not obligated to meet the buyer's loan commitment date.
Yeah.
They don't see that as a mandate date that they have to follow. It's up to the buyer to make sure they get all the documents in so that you can get the loan commitment. Remember, the contingency is called loan commitment contingency. So
Yeah.
you
Good.
have to work with your lender.
Yeah, really good point, Joan. And also too, these underwriters, they're licensed in many states. They work for, big banks, big lenders, and loan commitment is a Wisconsin thing. They don't have loan commitment in North Carolina, so they don't necessarily care that, we're
Yeah.
gonna miss the deadline. It's
Yeah.
up to me as the loan officer to send it, but not up to the underwriter.
Yeah.
So yeah,
Yeah.
just long story short, send us your docs. Loan approval, once we have like income cleared, assets cleared, collateral being the property or the appraisal, we can send the clear to close, like everybody's favorite three words, clear to close. Once we have that, means we don't really need any more documents from your clients. I guess I'm skipping ahead to point 10 here, but it's all in the same. Really, the only other thing that we need to verify after loan approval is the verbal verification of employment. So the lender's going to call the employer, just HR, and say, hey, is John Smith still employed there? If they say yes, great. If they say no, then we have some problems. So yeah, I mean, once we're clear to close, we're good to fund. We don't really need much more after that. Clear to close can happen in 5 days, can happen in 7 days, can happen in 21 days. Just depends, like I said, how fast we get docs.
Okay. And that's good for you guys to hear too, in terms of writing in competitive situations, because, you know, the faster that we can get a contingency, you know, waived, faster we can close is more helpful to a seller. So, 9 times out of 10. I mean, sometimes it's not, closing fast isn't necessarily, um, is not necessarily advantageous for a seller in some situations, but getting these contingencies waived and getting through them as quickly as possible is always advantageous for a seller. So, you know,
Yeah.
if Blake and his team can do it in 21 days or 15 days or even sooner, I mean, that's stellar. So,
Yep. Yeah, sellers love to hear clear to close. They just don't have to worry about it anymore.
yep.
All right, what's the agent to lender relationship? Lender being Cream City Mortgage or your loan officer. Number one, like communication and trust. We at Cream City Mortgage, like we were built on three major pillars, basically business pillars, is communication, creativity, and speed. And so we pride ourselves on communicating. We'll over communicate until you tell us to shut the heck up. But like this is a two-way street. So when you ask me questions, you expect answers pretty quickly. When I ask you questions, I would expect some sort of like acknowledgement or answer pretty quickly. I am an impatient person, so I like answers pretty quickly. And so it's kind of, I'd be a hypocrite if, I didn't give people responses quickly also. Market knowledge and value adds. He's one of my loan officers. He's been in the business for 20 years. He knows everything. Will Hall, he's one of my loan officers. I think he almost scored 100% on his test. He's like the smartest guy I know. I close 150 loans a year, been doing it for the last 5 years. We've seen everything. We only focus on mortgages. We don't have depository business. We live, breathe, and eat mortgages. So we know a lot about what we need from our clients, what's going to win deals, and a lot of market knowledge. Reliability and efficiency. We only get paid if the loan closes. We're compensated by the lender. The borrowers don't pay us anything, just side note for all of you. But we're going to work as hard as we can to close this deal. Otherwise, we don't get paid. And we're going to work super efficiently with our clients and with our agents. And then networking and referral growth. So we have a really robust CRM. If you ever send us a deal, it's going into that CRM. If that client one day refers his friend to us, I'm going to see it in there and I'm going to say, hey, are you working with Steph? Well, you should be. So we want to refer you guys business as much as we possibly can. And then one major thing, I think the most important is we understand as, a super hyper local business, small business, that our reputation is our business. And we know that you referring a client to us is an extension of you. And that's a responsibility that we just take super seriously because the last thing we want to do is screw up a file and have, Steph throw a tomato at my head at the grocery store because I screwed up one of her deals.
Yeah, I mean, having a good lender partner is huge, and you guys are going to build up. We recommend having at least 2 or 3 lenders who are your go-to lenders. It's kind of a rule of thumb to give out at least 2 to 3 names for any recommendation that you might give to somebody. But you're going to really get to know them and like just be in constant communication. I mean, in order for agents and lenders to get deals to close, we're constantly talking with one another. Um, and especially in that period, like leading up to an accepted offer too, sometimes. So, and I know like Blake and his team works on weekends too. I mean, that's a huge bonus to have somebody who's accessible. I mean, that's why a lot of us are working with local lenders versus like big banks, right? Who is non-communicative during those like quote unquote off business hours. So
Yeah.
you really want to like, again, have somebody who you can communicate well with.
Yeah, communicate well with. I'd say like if you can't text your loan officer, it's probably not a good relationship.
Totally.
It's not going to work out great.
Yes. Perfect. Okay.
Oh, do's and don'ts. Okay, cool. Um, get pre-approved early. We already talked about that. You know, sometimes there's something a client wasn't expecting, or they're commission only, and it's been a commission only for a year. We can't use their income. Get pre-approved early. It doesn't cost them anything, and it's a painless process. Maintain good credit, obviously, stay employed and stable. Okay, don't quit your job. We've already talked about a lot of this stuff.
Hey,
Don'ts. Or do you have any comments on the do stuff?
no, I was just gonna say, I mean, even if we went over it, that's fine.
Okay.
Yeah.
Yeah, provide all documents promptly. That's super important if we have tight deadlines. Keep sufficient funds in your account. So we need money for the down payment and closing costs. I would say closing costs are only like sunk costs are about $2,500. That's a lender fee, that's appraisal and title. And then there's always going to be like prepaid interest and escrow. We don't need to get into the nitty-gritty now, but those are part of your closing costs. So all in, I would tell your clients expect anywhere between like $4,000 to $6,000 for closing costs. And that's going to depend on when you close and taxes.
Okay.
Understand your loan options. I think like conventional for 90% of that stuff, FHA is a great option. But like I said, we have 15 or 20. So just ask your clients to get in touch with me. And then communicate. Don't move a lot of money around. That makes everything a pain in the ass for all of us because we have to source it all. If you're moving money from like a stock account to your savings account, we need to source that. So we need your stocks. If you're moving it back and forth, it's a nightmare. Don't do that. Don't quit your job. It's my very first loan ever. Actually, the guy quit his job a week before closing so you could take time to move. I was like, well, why don't you just take vacation, dude? Like, what are you doing?
Wow.
Luckily, he worked for Amazon and he could just get it back right away, but he quit and that sucked.
Did you close?
Yeah, we closed because I made him go get his job back.
Okay. Jeez. Wow.
Yeah,
Um,
I've had a few of those experiences at
yeah.
the closing table. Oh, by the way.
Oh yeah. Like I'm just gonna plug my ears and pretend like I didn't hear that.
Right.
Yeah.
Um, don't miss payments, obviously. That's gonna hurt your credit. You have between the 1st and the 15th of every month to make your mortgage payment. All of our lenders that we work with, they have auto payment options. So there's no excuse to miss your payment. If you do, that hurts your credit pretty significantly. Don't ignore me. Like I said, I'm only asking for things because I need them, not because I want them. Um, and so here's how it works too. Like I see what the underwriter is asking for before my borrowers do, and I know the guidelines really well. And if I think there's something that they're asking for that's not necessary, like I said, I spend all of my day fighting underwriters. Like if I'm asking you for it, it's because I need it.
I have
Um,
a
So you,
question
oh, go
for you.
ahead.
I have a question for you, Blake. I
yeah.
just had a transaction where the listing agent, no, the buyer's agent was furious because our agent, who is the listing agent, contacted the buyer's lender. And the buyer's lender explained things that he needed and the situation, actually told him that he was clear to close, which the buyer's agent hadn't told him.
Hmm.
Um, but anyway, she had a fit and she said it was illegal for him to contact her buyer's lender and that she wanted to get that lender in trouble for answering his questions and everything. I've seen it both ways. I've seen some lenders say no. I've seen some lenders be very cooperative. What's your position on that?
Yeah.
Yeah, really good question. For me, always my personal policy is like less is more. If the listing agent is calling me, asking me for stuff, I'm just super vague in my responses. I say, yeah, we're on track to close, not a problem. Um, I'm not gonna, I'm not even gonna let the listing agent know that the appraisal's back. As far as I'm concerned, that's the buyer's agent to relay all that information.
Mhm.
If the listing agent's asking me questions about like income or credit scores, I'd say, sorry, like I can't
Right.
give you that information. So me personally, I'm really vague. I try to never communicate with the listing agent, to be totally frank.
Okay,
Yeah,
Yeah, I think that's good. I mean, it should be the job of the buyer's agent or in the control of the buyer's agent on whether or not they want to communicate some of that stuff.
yeah,
And I'm sure that lender thought it was pretty, I don't know, just like not inconsequential things that he's answering, you know?
yeah.
Anyway,
If they ask me stuff about like income or assets, my response is always like, I verified their income. It's great. I verified their credit. Don't worry about it. And I verified their assets. We're in good shape here.
Mhm.
Like, I'm not
Yeah,
sure what else the listing
that's
agent.
usually what the listing agent is asking for. I mean,
Yeah, yeah,
their seller's nervous about getting that commitment.
yeah. I'll say that stuff super vaguely, but I'm not going to give any information like where they work or what their income is or what their credit score is, stuff like that.
Yeah, fair.
And actually, I think like, so when we approve somebody, we run the system through Fannie Mae and Freddie Mac. It's called AUS, Automated Underwriting System. And that's what gives you the approve eligible status. I don't think I'm allowed to share that with anybody except the lender. Like the buyer can't even get that, I don't think.
okay.
Don't assume you're approved until closing. Oops. I guess, that kind of touches on what I said earlier is like after you're clear to close, the last thing we do is the verbal. So the verbal verification of employment. So don't quit your job. Every once in a while, there's like an audit by a lender who will just pull a file out and check it. Never had a problem, but I guess, yeah, until you've signed that paperwork and you have the key in your hand, don't pop the champagne.
Cool. Yeah, I'm gonna go back to the don't make the large purchases. That happens a lot where buyers will take out a loan for a car or Joan, was it your example who they took out a loan for like furnishing their new house and it became a huge issue.
At the closing table.
Oh, okay. That's the one you're referring to.
Mhm. Yeah, I had a couple of those. I had some guy announce he was so excited they wanted us all to go out and see his new car.
Closing on my house. I just bought this Range Rover. It's
Right. Come on, look at it.
um if they do want to buy furniture, have them reach out to me. They can put stuff on their credit cards. Just don't let them open up any new lines of credit.
Yeah, I think that's what it,
But
right.
again, like don't tell them this. Just have them reach out to us. We'll confirm.
Okay.
Because Home Depot is like, oh, if you open up a card with us, you get 20% off or whatever. Just don't do that.
Okay.
Don't
Yeah.
quit your job to move. You can take vacation time. Cool. Here's my info.
Um, yeah, you guys. I mean, obviously, Blake and the team are on our rosters. Just a invaluable resource to us. So we appreciate them so much.
Yeah, we
Have any
appreciate you guys.
you guys have any general questions? Okay. Oh, does Cream City do refis?
Yes, we do. Yeah. Yep. We do a lot of refis. Well, not a lot anymore, but that's certainly something that we do.
Awesome.
In a refi too, just so you guys know, it's the same process as a purchase, basically. We look at their income, we look at their assets, and we look at their credit. There's not too much of a difference.
Cool. Any other questions?
Yeah, I liked at the beginning when you explained the difference between what a mortgage broker is and what a bank is or whatever.
Oh yeah, no. I started Cream City
Flexible.
Mortgage in 2023. I was at Fairway before, and Fairway was awesome. Like their service is great. Leadership was awesome, but their pricing was really high. They just have a ton of overhead. And so, I set out to start Cream City Mortgage to offer the same great service. Fairway really set the bar high for that with just more affordable costs and rates for our clients. And so that's what we do. And kudos to you guys. We work with a lot of different agents, and KW always has the most professional. The contracts are the best. They're the best to respond. So you guys do a great job in training.
Thank you for that.
Yeah.
Thank you.
Okay, well, I think then with that, if you guys can tune into Blake's training tomorrow at the North Shore office, you should go. What time are you guys doing that? 11?
Let me see. I think it's 10:15 right after.
Oh,
meeting.
even better. So right
Uh,
after the team meeting.
Yeah, 10:15.
Awesome. Okay, well, thank you. And this, you guys, this will be on YouTube. So you'll be able to access this training later on. And then we'll be back here over Zoom at noon next week, Monday.
Great. Thanks, everybody.
Thank you.
Thanks, Steph. Thanks, Joan. See ya.
Thank you.